Okay guys, Tuesday the 24th of October and we are on the footsie 100. Now I've not been triggered into a trade as yet. You can see I've got it set on the screen. What I'm looking for is the footsie to pop down and trigger us in. Now from last week's video, the live trade, if you watched that video, I went over how I was going to start looking at, in these live trade videos, showing you ways or different kinds of ways that you can approach trading, which I consider to be a more cautious approach to trading. And it's because what I find is that a lot of beginners, and not just beginners, when I was learning, I did the exact same thing. I would have lots of periods of profitability, but then something would happen, maybe emotional trading would come in, and I would have lots of losses, and it would wipe out all those wins and leave me down on the account. And one of the things that I found was that, and I still find from speaking to beginners, is that a lot of the work is done on trade identification. So everyone spends so much time on their trading plan how to find those trades, how to identify the perfect entry, but then they don't really know what to do once they hit to enter the trade. And they get into the trade and they just sort of sit on their hands and they come up with some sort of arbitrary number. I'm looking for 10 points, 15 points, 20 points. I'm looking for 1 to 2 risk to reward. And there's no real reason behind it. They just hold the trade. Then they'll have a couple of losses and that'll start to make them panic. And one of the reasons is because they don't have that plan for when they get into the market. So when it comes to trading, I have no idea, the people that watch this video, I have no idea what you guys risk per trade. The way I'm looking at this is, if you are trading full time, for me, the minimum you really need to be risking is £200 in a trade. That allows for probabilities to come into account, and it means if you're trading effectively, and having a relatively good return on your trading, then you should be able to live off of the money. Now, I would also say that if you are thinking about trading full time, my suggestion is to wait until your account is at a size where you're risking more than £200 per trade, because it's not giving you a lot of leeway in the trades. So for this trade, that's exactly what I'm doing. I'm going to be risking £200. What that allows me to do is set it at a level that I would be if I was just starting to trade full time, and also it allows me, a little bit of not leeway, but it allows me to sort of talk a bit more through the trade. Rather than risking a full 1%, it allows me to concentrate on the video as well as the trade a little bit more. So for this one, what I'm looking at is, let's zoom out. Looking at the footsie, recently it's been testing up at these 7561 levels, and thus far it hasn't managed to make a break higher. Now we've created the test here, and at present we are currently testing it this morning. Now with these tests, what I was looking at this morning was the potential for a pullback. Now we've came up into this level yesterday, so Monday the 23rd. We have created multiple swings here. Let me just mark all of these in like this. And then in overnight trading, so yesterday what I went over with subscribers was that if we started to break down below a key level right here, 7518, it's very likely we would see the market coming down to test 500 once again, and likely we would then see the move down into what is today S3 7487. Now the breakdown came yesterday, but the move down into 7502, unfortunately that came in overnight trading. Now we have tested at that level, and then this morning we have pressed back up to retest at these previous swings to create another lower high test of this level. Looking at all of those things, I was looking for a short position, and basically what I've said is, I'm happy to get short in this market on any, so we've been triggered into the trade in any rallies until we start to really break above 7545. That becomes a kind of a bullish level. If we break up above there, I would certainly expect us to retest 552. And then if we break up above 552, I expect a much stronger rally to come into the footsie. So we got that pullback, we got that pausing price action, we then got a small signal at 850, right here. And we have just been triggered into this trade. Now, what I'm looking for is, with cautious trading, is basically, I mean, this is how I go into trades anyway, but even more so with cautious trading is I want to think about my loss, the potential loss, more than the potential profit. So I've got into this trade and I'm thinking, okay, where is the nearest level where if this market is going to hit it and then reverse against me, it's going to come. So I'm not thinking, where is a sensible recent swing where I could look for potential profits. I'm thinking, where is the closest area whereby that move against me could come? And then all I'm doing is I'm looking at recent price structure. So we've tested these levels, so I'm relatively happy to look for the move back down as I've expected. So target would be at least down into this zone right here. However, where am I getting the sense that we could see those reversals? Now, this move has been fairly strong on the way up, and it hasn't really created any price pauses. Now, that's a good thing in terms of cautious trading, because when you see this, there's a higher probability that you're going to have the retrace. I've had a little spike up here. We've got the MA200 sitting right here, which is lining up with this little pause here, which is coming down toward the swings from overnight trading, early morning trading, so 4 a.m., 6:35, 7:35 a.m. So if/when the market gets down there, I want to start protecting the trade. Now, this is only a very, very minor spike up. This would be incredibly cautious trading. For me, I'm looking at really previous swings like this. If this had been a few candles, definitely it would become the level where I'm looking to protect the trade. As it stands, it's down at these levels. Now, so what do I do? Well, 518 for me is a daily support and resistance level. So I want to take that into account. Basically, with cautious trading for me, and this is how I used to trade, I should point this out. And in all honesty, since I've been practicing this, because I knew I was going to do the videos, I did this all last week, it's still effective. And I still actually enjoy trading this way because it limits the emotional aspect of the trade, because it's very unlikely you're going to have full position losses, because you're being so cautious that you're only giving the market a little bit of wiggle room, and then you want to see the acceptance. So in this case, the acceptance of the bearish sentiment. So all I'm doing is, when the market gets down to this 518 level, my trade is going to be fully protected. So I'm going to bring the stop to break even. It might only be 4-5 points. It's not giving the market a lot of room to bounce. That's the downside of very cautious trading. It doesn't allow for retests. It doesn't allow for choppy price action. It only holds you into the trades and gives you the profit on the trades where they just keep going. So as soon as it gets down to this level, the trade is going to be protected. Then, if it gets down to these levels, because we have a double confluence here, MA200 and these swings, what I'll do is I'll close partial profit. Now, what are we risking here? 17. We're risking £17 per point. So let's bring up the calculator. I do understand that when I'm typing on this laptop, you can hear it coming through the microphone. I apologize about that, but there's no real workaround for it. So 17 pound per point. Let's close out 80% of the trade. 75 to 80% it tends to be what I close out on when I'm taking regular trades, risking 1%. So 13.6. So all we do is we change this to, let's make it 13.5. And now when the market reaches these levels, I just close out the partial profits. I've already got my stop to break even. And then I just look to run the remainder. And then the remainder either comes up, takes me out of break even, or it comes down to me a second target. Second target would likely be 510.2. It's the bottom level of this zone. You can see the market's respected it a couple of times. It makes sense as the level to get out of the trade. So what we're going to do is we're just going to wait and see how this trade plays out. We have now touched that 518 level. The stop is now at break even. So no matter what happens, we are not going to suffer a full position loss. Let's actually bring the stop down, physical stop down. The reason I don't like doing the physical stop is because when you're trading like this, and you're bringing your stop to break even relatively early, you get triggered out a little bit before the actual stop level is hit. So before it actually hits that break even level, just because of the spread, the bid and the ask on the market, it's just what happens. What I tend to do is just close it out manually. If the market starts to come back up, I just open the position, get ready to close it out. As soon as I see that zero for break even, I just close out the trade. What I'm going to do is just going to leave it there on the screen, and we'll see how we get on with this trade. Now, as I mentioned last week's video also, the way I do this is I record, choose these trades, and then I show you whatever trade it is I take. Now, with cautious trading, the problem with that is going to be that with cautious trading, you suffer more break-even trades. It's just the way that it works. Because you're being so cautious, because you're only holding on to those high probability trades, the ones that start to break down very quickly, you get taken out of more trades at break-even. I have no way to control that. So if I'm posting up break-even trades, that's exactly why. I'm trying to show you exactly how I trade when I'm trading cautiously and the way I approach it. So there's nothing to say, it's a daily support and resistance level. Nothing to say this now won't pop back up to retest at this level, take me out of break-even. That's just the way it goes. It's one of the drawbacks, certainly, because you start to get frustrated. Cautious trading is more frustrating. Now, it's more frustrating because of the break-even trades, but it's also beneficial, as I mentioned, because you're not having those full position losses. It's very, very rare that you have full position losses because you're being so cautious. You're only taking the high probability entries, first of all, but you're only holding on to the trades that are then moving quickly in your direction. Okay, so we're back up. We're on about plus 3 points on the trade. Rather than me just rambling on, I may pause the video. We'll see what this candle does. It might just spike up and take us out at break even. I'll give it a few more, give it another 5-10 seconds. But if not, I'll likely just pause the video and then I'll just turn it back on when the market makes that move either up into the break-even level, whereby we get taken out of the trade, or down toward this target level, whereby we close out partial profits. Okay, so the market has then just popped up and taken us out of that trade at break-even. It's not actually hit the break-even level. This is what I'm talking about bringing the physical stop down. It didn't quite reach break-even, and then it triggers you out. The benefit of that is rather than you waiting to hit to exit manually, when it does take you out, you get a very, very small profit on the trades. Downside is that it can come up, not quite reach your level, and then still make the move on the trade. So that's how I approach cautious entries to the trades. Hopefully I've given you the benefits and the drawbacks on that type of trade. And then all I'm doing now is continuing to cautious trade. I just go back to waiting. I just go back to waiting for another setup. And then I do the exact same thing again. I look for the identification areas on the trade. I look for, where is it likely that the market is going to touch and then bounce against me. When it hits that level, I consider the trade at break even. Where's my target? Where's potentially my second target? Or am I looking to get everything out at the first target? And then I just continue doing that. And you can take 2 trades, 3 trades that are going to hit you at break even, and then you get your trades that take you into your profit levels. Okay guys, so we have just been testing up at this resistance level for most of the day. I have been watching the market. And what we've been doing is we've been trending higher, so the low, higher low, and we had a small one here, then we had another higher low here, basically creating the sloping support line. We have created resistance, resistance, and resistance. The resistance is basically at the 7533 level. And we can actually bring it up just a little bit, sitting like this. And so what we've done is we have created an ascending triangle at this key resistance level where we were looking for the potential weakness. So what I've done is we got the signal candle at 105. We popped up, we rejected, we got a nice strong bearish candle here. I've taken this as the entry, and what I'm really looking at as the management point for this one is the pivot point, which is lining up with this sloping support line for this trade. Now, I don't want to see the reactions coming in. What I'm just going to do is continue on with that cautious trading approach. If we pop down and hit this level, really where it is now, to be honest, if we start to reject back up, I will just exit the trade at break even. Now, what I'm going to do for this one is I will just exit it manually if we come back up, because with the with this market, through IG, you can only bring your stop to break even when you are at +4 points. So all you do for that, when it comes to that, you just set it, just do it manually. When it pops back up, you just exit the trade. Very, very simple. And as we've seen from that last trade, it's what I tend to do, because it doesn't then trigger you out early from a trade like we got on this one. We spiked up, we did not get to the exact break-even level. It took us out of the trade, and then we came down and hit the first target levels. You can see we came down, touched on that MA200, touched on those previous swings, and that's where we then bounced. So for this one, I'm just going to do it manually. We're looking for the move down on this market. Really, first target on this one will be at least down at these levels, lining up with this swing and this swing, but really down toward the previous zone at 7,520. Now, the reason for that is because adding to the resistance level, we have then added in the price squeeze. When you combine both of these things, this gives you a little bit more confluence into a trade. Begins to become a little bit more worthwhile, looking for a larger profit target. So we're going to see how we get on this one. Watch for reactions down here, but really what I'm going to probably do is consider my stop at break even now. If we start to break down toward at least this swing here, and the 7,518, then we will look to lock in partial profits. We'll just do the exact same thing again. We'll just take 80% of the trade, and we'll lock it in, and then we'll let the remaining 20% run. Okay guys, so the market has popped down into that target level. What I have done is I have closed out partial profits. So you can see over here, I've basically closed out £10 per point, which is equal to 75% on this trade. So with this cautious trading, the reason I want to go over it, and the reason it is so good, what I should point out as well, actually, I've been meaning to say this in one of my videos. I realize that when I am talking in these videos, I do say quite a lot. It's because, I'm trading on the 5-minute time frame. I have to pay attention. I'm also trying to convey information at the same time. So there you go. I just said it again. It's just me thinking as I'm working. I'm a guy. I can't really multitask very well. So sometimes I have to have a quick pause, quick think about what it is that I am saying. I'm aware I say that in the videos. I do apologize if it is annoying. Okay, so with this cautious trading, one of the main benefits, so this one right here, the trade that we took early morning, we had the setup candle at 8.50. Now this trade for me is a perfect setup. And it was a perfect trade in that it moved down into that target level. The only thing being that I brought that physical stop down to break even. I said at the time, I prefer to usually just close out manually, and that's the exact reason. But one of the ways to decide, actually, if you're going to do that, if you're going to bring the physical stop down, or if you're going to do it manually, is quite simply how your past performance has been at exiting at break even. And I don't mean if you hit it exactly at break even. I mean that if the trade comes back to your break even level, do you just close it out, or do you sit there going, I want to give this a little bit more wiggle room. I'm just gonna hold off. This could potentially be a retrace. If you start doing that, then you need to start using the physical stop, because the physical stop, there's no argument, it will take you out of that trade. If you start doing things like, having the question in your mind, holding off because it's a potential retrace, you're just taking away from your trading plan. You may trade in a completely different way from this cautious trading. I'm just using this as an example to show you that you can trade in this way. I'm just showing you the cautious way that I use, so that you can see that even doing it this way, you can still profit with trading. And actually, as I've mentioned, the more that I've done this the last couple of weeks, I'm actually starting to find that now that I'm further down the road, I actually quite enjoy trading in this way. It takes a lot of the sort of the decision making when you get into a trade off of your hands. There's no ambiguity. The market came down, it touched the management point. I knew if it came back up and hit that break even point, I would have just came out of the trade. And what that's doing is it's protecting you from making the mistakes, because it's quite easy to make a mistake when you're risking live money and when you're looking at a chart which is it's just filled with candles. Everyone's an expert when they're looking at a candlestick chart after the event. So, if I was analyzing this market later on, I'd be like, oh yeah, perfect, seen this. ABC is what I would have done. I would have taken that trade down. I would have gotten out, 1 point before the lowest point it reached because of this and this and this. And then when you do it live, it becomes a lot more difficult. So if you can have a structured approach, it really can help your trading a lot. So, okay, the stop is now at break even. It's came all the way down to this 518 level. We may now just retrace back up. We may be pulling back up to retest these levels right here before we see another bearish movement. But the key thing is we've locked in profits. Our stop is at break even. What I'm actually going to do, because I'm probably going to go away from the computer now. I've waited for the first setup. It didn't work out, and then I've decided to wait for the second setup and add it to the video. It's about 10 to 2. That will be me finished for the day. So all I'll do, stop the break even. I'll probably set an alarm rather than a limit order, because the alarm means I can come and watch how the market is reacting. If I see it just drifting down to these previous lows, when I come back, I'll likely just close out the full position. If I come back and the alarm's gone off and it's because we've had huge engulfing candles coming into the market, then I'll hold on to the position. I'll just sit and I'll watch. I'll turn the video back on and I'll explain exactly what it is that I am looking at. Okay, I'm going to pause the video for now, guys. Okay, guys, so the market has came down. We're just at 10 past 3. I'm actually about to do subscriber videos. Now, the market came down. It has triggered the alarm that was set down here, and it has found quite strong support. We have made a bounce back up into the 520 levels. So what I'm going to do is I'm just going to close this trade out at 9.5 points. What we can see is the market pulled down, it tested at this level, bounced up, retested at that potential resistance area we went over, and then broke down, but we just found too much support at the levels down below. So with the trade, we closed out, it was around about 8.5 to 9 points at £10 per point. So we'll say 8.5 points, which is £85. Then we just closed out 9.5 points at £4 per point, which is, let me just double check that one. 9.5 times 4 is £38. So that's £123 on the trade. Let's move this. So that was cautious trading. And really this trade here also a very, very good setup. As I went over, it just popped up into that break-even level. If you had been doing it manually, it would not have taken you out of the trade. And from last week, I'm not sure if it was the week before as well, but I've been showing cautious trading, just trading my normal account. And as long as you're picking the good entries, you still get the trade setups coming. And it's a great way to not only build your account, but when you first start to take trading seriously, it's a good way to protect yourself from unnecessary losses and still make profit when those good setups come, because you're only looking for the trades like this, where the market just makes the move. You get into it on a perfect setup, it makes the move, you're locking in profit, your trade's protected as soon as possible, exactly the same as this one. It started to come down, we just protected the trade as soon as it got down to that level, and then unfortunately this one just popped back up at break even before it reached down into these levels. But I must stress that there are going to be times trading like this that the market will just chop you out of lots of trades at break even. You go through phases of taking 4 or 5 trades and it's just break even, break even, break even, break even. And then what's even worse is on a couple of those ones it'll hit your break even, but then it'll go all the way down to where your target would have been. As with everything in trading, it only works if you stick to it. And as I've also mentioned, relearning how to do cautious trading, I've actually found a lot of benefit, third time lucky, in it for myself. It's a really good way to trade. It takes a lot of the emotion out of it. And there we go. So as always, guys, I hope that was helpful. Hope you've all had a good trading week. I'm James Orr, and thank you.